Hi there traders, this is Steve Miley, the market chartist on behalf of FX Explained, and here we're going to look at the S&P 500, the E-mini future in here on a short to intermediate term basis. Well, we've had this kind of quite aggressive rebound in here over the past 24 hours as basically the Fed announced the implementation of their corporate bond buying program, also their Main Street lending program. However, these are this was pretty much old news in here, but the market reacting very positively. Maybe some shorts getting squeezed out from last week's sell-off. Last week's sell-off for us, though, technically more damaging than the rebound in here was damaging to the sell-off in here. So the negativity from last week in here, remember that was driven primarily in here by the Fed's more downbeat assessment of the US economy, but also alongside that breakouts in new coronavirus COVID-19 cases in China and Japan. Also the rise in some states in the US for new cases in here, particularly in the Southwest, Arizona, Texas, down in California, also across in Florida. So these upticks in further coronavirus cases in here in the US states and also some parts of the globe in here, certainly worrying about a potential second wave of COVID-19, and that drove markets lower alongside last week the Fed's more downbeat, more somber outlook for the US economy. From a technical perspective, the S&P 500 certainly was damaged. And remember, we extended lower again yesterday morning on Monday morning, and we did take out this important support in here, 2965.5, and the breakdown through there was enough for us to shift that intermediate term outlook from bullish back to more neutral in here. So we now see a broader range between the recent peak up there at 32.31 and a quarter and this important mid-May swing low in here at 27.60 and a quarter. Despite the rebound of the past 24 hours, we're clinging to still a negative theme whilst below this resistance point in here at 31.18 and a quarter, and we're looking for a setback from below there, looking for a market to push down through these supports in here, labeled in here that we see from yesterday, 30.60 and a quarter, 30.31, 29.95 and a half, looking for a push back down through yesterday's supports, and then ultimately going into this week looking for a move back down through yesterday's low, 29.23.75, and potentially a deeper correction back to that mid-May low, that key low at 27.60 and a quarter. So we don't think that yesterday's rebound is going to be sustained. We don't see it as the start of the next big up leg, and we do see this as part of a topping pattern developing from last week, and we do see a more negative theme coming through in here both today, going into Tuesday, but also going through into the second half of June and potentially beyond. This has been Steve Miley, market chartist for FX Explained. Going to wish you all a great trading day. Please do be safe out there, and I'll be back with you very soon with another video.